Holy crap. Pretty good. Oh, I stream that on. Drivers. One minute. All right, let's get right into it. Right into the mainstream live. Give me just 1 second here. I got to throw an ad in the beginning here. So if you get one right here, apologize. It'll be quick and over. Close. Try to do it before you guys get in here. All right. Post this real quick. Be just a second here. Just a second here. All right. Good morning. Who's out there? All right, let's take a look real quick. So I'm going to give you a quick rundown before I start saying good morning and all that kind of stuff for you. So the first thing I want you to be looking at this morning is where do we expect to see rejection this morning? Now, I don't know why that's not showing up. Okay, so this morning, okay, what you're looking for is the 5 minute to be coming down right here, okay? That's just before you continue on. It's, people want to know where we're headed. Now, this 5 minutes kind of curling up right now. I'd really like to see it continue down and some kind of a squeeze higher briefly. We can see the squeeze higher, maybe in price, come up a little bit here, and then get more rejection. We could get just start continuing on the downward path right now, but I'd really like to see it at least come up, maybe come up to like 410 or so, and then reject lower again. But it could just keep or continue to trade down. Regardless if it does or doesn't, the first place you want to be looking for a target down below is 404.78. And as you know, there are usually natural support levels at 5s and 0s. So 405 somewhere in there we'll be looking for. We'll see if there's a quick squeeze here. This is a nice cluster, though, right above here. Here's a 3 trigger cluster. This is usually very bearish for down velocity. So we'll be looking for a rejection here. Sometimes we just start rejecting, though, right off the 1 minute. So if you were to look at this in reverse right now, pretend you're a bull right now, right? You'd see some consolidation here in the 1 minute. Wait for the 5 and the hourly to catch up, and you can usually take another stab at it for another low. The prices you're looking for here currently we've got 409.23, 410.65, and then 411.98.90. Now, there's something to be said about this right this morning, and that is how supportive the market has been. We're going to look lower so I can explain this better to you, all right? To get some velocity to the downside is going to be a challenge. If you look at the momentum that's coming up from underneath, we've got 395.65, 397.23, and then 404.96. And also the options market is not priced for us to go much lower than 404, 405, somewhere in there. If you remember yesterday's program, as we were closing out the day before you had the rip into the close, yesterday I had said, interesting. If you look at February 21st, we don't have any pricing into the upside or the downside. And I thought that was kind of odd that there was no pricing higher or lower. So we talked about a strangle on the up and down side, picking up calls and puts yesterday afternoon. And it was implying that we have more sideways action ahead of us. And the market wasn't priced that way either. It was only priced down to, I believe, 404, 405 as an implied move today. So there is an outside chance, right, that the down move is not going to be as severe as you think unless we get more put buying into the market and less supportive call buying, 0-day call buying. So we'll watch the options chain this morning, and we're going to talk about that today too. We're going to have a big rant today about zero dates, and it's reminding me right now of GME. I almost made a post about it last night, and I said, I'm going to let it be for the night because it started coming out yesterday afternoon. But more information about it started coming out yesterday afternoon, and it reminds me of GME because if you were long GME before any squeezes, and watching how it played out over time, it was just fascinating. And I'm seeing that same discussion like it. That reminds me of GME pre-first squeeze. And when you know what's going on before anyone talked about it, before Spot Gamma talked about it, we've talked about it on this show for a long time. You guys know that I've been trading zero dates for years, right? I think some of you guys know that. I think some of you guys know that I watch that option chain every single day, all day long. And reading some of the shit that people post, I'm like, these people have zero idea what they're talking about. Now, they sound smart. And I'm sure that before they make a post, they go on the internet and they try to write a bunch of shit down. And we're like, okay, I'm going to sound really smart on social media. So we'll just keep it dumbed down here, and we'll explain it to you so you have a better idea than most people on social media in the narrative that's trying to be pushed on you by famous banks and especially news organizations like Market Watch. I'm like, well, you got to be kidding me. That's like reading an article from Seeking Alpha and claiming that as being real. So, anyways, we'll go over that this morning. We're gonna have a large discussion about zero dates this morning, the rise of zero dates, what's real and what's fake about the narrative being passed around about zero dates. But just note the option market right now is not priced in for a bloodbath today. So you need to see no call buying coming in and more put buying coming in on shorter date, and the unclenching of the options market. And of course, we had expiration. We didn't see the unclenching yesterday. And what else is funny too this morning is that a buddy of mine, a couple buddies of mine, as a matter of fact, Andrew Constant had talked about the impact of closing of puts by Icahn and how we should have gotten some, or not. He had said we should see some acceleration to the downside once he closes those positions. We didn't see that, right? We didn't see that. I know that the excuse is out there now that he's long the market, and that's why it didn't happen. But you still should have seen it. We can explain that later on too. Maybe we can try to get Vol on this morning and see if we can talk to him about what we should have seen and when we should have seen that impact the market, which was just after CPI, and we didn't see that compression, and that is intertwined into the market this morning. So if you're looking at, I'll look on some higher time frames for you here, but the idea being is very similar to. If I mute this real quick for you. The idea being that back here on the 9th, we should have seen, and there was an expectation. I don't know I don't know how much you guys know about the smart people out there, right? And the people with experience and all that kind of stuff, and the people that are rocket scientists. They expected the unclenching down
In 10
here
minutes'
with
time now,
the
at the top
closing
of
of
the hour,
puts
expecting comments from
by
ECB's Lane. So that is ECB Chief Economist Lane, who gives a lecture at the National Institute of...
mute this right here for you. They were expecting an unclenching when we started to make lower lows down here, right? And that did not happen. Now there's some very intelligent people that tried to try to front run this information, which I highly respect. But and then afterwards, when it didn't happen and all their plans were destroyed, there's an expectation that yesterday that would happen, and of course they were all wrong once again, and they got fucked. And as a matter of fact, we tried to short this yesterday, right? Remember, we tried to short this down yesterday. We checked again later in the daytime, and we couldn't get the rollover. And so the next question would be, does it happen today? And so you see people that claim to be smart saying, "Well, it's the goddamn zero date market, and it's always their problem, or it's their fault." It's interesting because a couple of years ago, I believe his name is Roy Niederhofer, no, not this Niederhofer, but another Niederhofer spoke about being able to sell volatility and hedge your position, how impactful it will become in the market in a couple of years. So try to find his tweet on FinTwit. He posted it, I think, in 2018. It was like long time ago, of how there will be a rise of that in coming years. And so we'll talk about that this morning as well. We'll roll all this stuff together into today's broadcast so that when you guys hear people talking like they know what they're talking about the zero date market, you'll actually know. You can just dismiss these people with a full stop, okay? And maybe if we get a chance, we'll look into the options chain as well, so you can see who's actually doing this. Like Marco yesterday talking about how there's so much risk to the market, and then we've got I'm not going to name names, but another Volmageddon, crazy town shit. We'll talk about all that stuff this morning too. We'll talk about weaponized gamma, all the other nonsense. Well, that's not nonsense, but it is kind of funny to see. You know, I was thinking about this yesterday, and I'm like, huh. I'm like, no one had a problem. Nobody had a problem with no one had a problem at all with weaponizing zero dates to sell the market in 2022. No one had a problem. That was going on every day. Every day you'd see waves of zero date puts coming in while we were selling the market. And then you see waves of zero date calls coming in to support the market. So I remember this is like 2 weeks ago or past 3 months. We keep hearing we're getting another leg down. It's going to be 20%, and now it's going to be 30%. And then every reason why we're going to sell, we didn't. And now you've got Marco coming out that goes like yesterday. The funny part was that yesterday on Vixpiration, you literally had the entire market go, "This is our bread and butter. Vixpiration, we sell the fuck out of this market. It starts on Vixpiration." And they were like, "We're going to sell the shit out of this market today." So you know that the smart people right up into JPM were short this yesterday. And when it didn't happen, they're probably too large to get out of that position. And so what do? You get a guy like Marco. He's like, "We're going to go to the news and post an article by 10 or 11 or 2 p.m. and say it's the goddamn zero date call buyers." And in fact, the zero date call buyers are the institutions. These aren't small players, and they're the same people that have been doing it for years. Now they've increased their position size over time. It used to be like 140,000 contracts, but then it grew to like 220,000 contracts, and now it's growing to like 320,000 contracts a day. Now, if you watch the chain every single day, you'd know that. You know that it's not retail traders. You'd know it's not hedge funds. This is some serious weight being thrown around. Serious weight being thrown around by the very institutions that probably fucked each other yesterday, and like one institution's fucking another. And then now there's claims that there's SoftBank people doing this in the background, but it's not. It's just banks. It's banks doing it, and they're doing it to each other. And they did it to each other on the way down. So I just thought it was ironic. That was ironic that there's a claim that it could produce another Volmageddon. I'm like, Volmageddon? I'm like, that was like an 11% drop. As a matter of fact, it was a normal 7 to 10% drop. And then it extended for one last leg down. We see that all the time, even in bull markets. We see 1 or 2 months out of the year where you get one more extension down. I mean, it was a disaster for the VIX products, but for the regular market, I'm like, okay, so 11%. Are we getting 11% now? That's a normal down. That's a normal down down part of the month for us. 8, 6, 8, 5. I mean, when we were in 2022, we were dropping 20 fucking percent. So I'm like, well, wait a minute. Okay, so we're at risk of a crash, right? This is what market crashes are made of. These are the people. These are the people that are saying we're at risk of a market crash. This is what market crashes are made of. I'm like, bullshit. We just had a market crash in 2022. Are you saying that we're getting another, because there's excuses given constantly. We're going to get a market crash. I'm like, we already had one. We're already expecting another one in 2023 at last leg. Are you saying it's going to be one on top of another? Not happening. I know the mechanics in the background. I understand that the logic behind it keeps growing. That, come on, man. It's like it's just never ending. It's someone that's positioned wrong. It's someone that's or it's not. It's people that are positioned wrong. That's what it is. I'll just tell you plain as day. That's what it is. It's so funny. It's like, you got to be kidding me. And there's a backstory on Volmageddon as well that's rarely talked about. There's some people that know about that story in the background. People that got fucked in that situation. The actual pros that did sometimes talk about it. So I don't know. It's a disaster. That's not a disaster. It's the comparison's wrong, and then the reasoning is wrong. It's almost like the people that are saying, well, we're setting ourselves up for another Volmageddon. I'm like, these same people are saying we're getting another leg down. So now this is the reason? It's nonsense. It's pure nonsense. We'll talk about this more this morning later, or this afternoon or this morning or something like that. We'll get into some data and some details. Okay, now with that said, the market has been more supportive. We're not seeing the continuation on the downside. And part of the reason is we've got this momentum that's been coming up for some time now. We're going to look. This is odd that this isn't showing here. It's not transferring from device or instance to instance. Now we're going to look over time here, okay, and find out why people are all upset. That they don't want to discuss. They don't want to talk about it at all. Now, there's some other things I could show you down here, but I'm not going to show you this morning. The idea that you need to understand is that over time, as time passes, the Fed has bought time for the market. You have to understand that, okay? We started selling down in January 2022. Now, I don't know if we're getting a soft landing or not, but what the Fed did do that no one likes to discuss is bought time. And the more time that's bought, this is on the upside and the downside. So if we're see this blue line right here, if we're cranking straight up like this, right, we're stretching the market, we're bound to come back down to it, right? In the shorter amount of time it takes to get there, right, the faster the reaction is going to be, okay? Now, the same thing happened with our market. In 2022, we traded down, and then now we started trading sideways. And it's given time for these trends to catch up. Now, we can break through them, and there's actually trends lower than this too. But we can break through them. But the fact is that when these trends finally catch up after a year and a half or so, it's harder for the market to crash at this point. Right now, it is. Now we can crash through here and go much lower, but it's not as easy. And so that's why you're not seeing the acceleration to the downside. We weren't able to trade under these things and hold either in previous instances. So everyone's like, zero dates. And it's not fucking zero dates. Sorry. It's not zero dates. As a matter of fact, if you look closer, you can see it was not easy to trade under this trend either. Way back here, it wasn't easy. 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 And way back here, it wasn't easy. And you got people trying to tell you that, like, CPI is going to send us under here. Tell me a CPI report is going to send us down under here. A jobs report is going to send us underneath there, or your zero date bullshit. They were using zero dates right here. They're using zero dates. That would be a double compound effect, wouldn't it? If you're using zero dates and it could crash the market Volmageddon style, it should have while we were selling the market, right? It should have been an amplified effect. We should have just started blasting through levels sometime back in 2022. So I just don't want to hear it. I'm tired of hearing it right now. Like between the news, when it's being used to try to get the market to go down or to create fear in the market amongst retail, and then retailers gobbling it up and just regurgitating it. I'm like over it right now. Totally over it. And so just right now, you can even see on an hourly right here, we have a magnet. The magnet's up here. Magnet's not down here. Magnet's up here, right? We keep trying to gravitate back up onto that long time momentum coming up. We traded under it in December, and what do? We magnet it back up and started trading higher. And you might see that same thing happen here, even if we have some weakness in the market. Okay, so when you're looking at the downside move, what we expect, I've told you guys a million times, can we get some acceleration to the downside? If you're a bear, you want to see acceleration. If you're a bear, you want to see not only a break of 396, told you the magic number, I think last week was 396, but you need to break underneath this momentum, like get underneath it with velocity, and you need to reject it and then get a velocity move on the downside. Until you do that, you need some major news for that to happen. And no, it's not going to be just people not buying calls, 0-date calls in one day. I apologize to you. That's not what's going to happen. It's not. We've seen it already. If you're going to blame the 0-date market for it, if people stop buying calls, we saw that fucking happen in 2022, and we didn't see it. We didn't see a major crash. We saw 20% declines. So it's like always looking for an excuse for why we're going to crash. If we drop 20% today, would you blame it on 0 dates? That's insano to me. It'd have to be like a 50% drop. I guess maybe that's what we're calling for now, right? That was my point on price. Is it 30% from here, 20% from here? Is it 30% up here? Is it now 50% because of 0 dates? It's like just grasping at straws to no end. Non-stop garbage coming out of mouths. So, with that said, we'll come back to some of this stuff. Non-stop, just never ends. Just constant bullshit. GME was the same way. When I was watching, when I was in GME prior to the squeezes, I was watching FinTwit. I was on there with a guy named Suspected Saboteur. Look him up. I'm friends with him on FinTwit. And I was hanging out with him in FinTwit during GME. And we would just sit there and talk to each other. And I'm like, watch these guys. These guys have 100,000 followers, 500,000 followers. These guys are Wall Streeters. These guys are hedge fund guys. These are guys that are financial advisors. These guys know everything. These are the smartest brains on FinTwit. And we just sat back and fucking laughed at these fucking people because they had no idea what the fuck they were talking about. None. And they have no idea what they're talking about here either. They have no idea what they're talking about the 0 dates. They're going to make some shit up that sounds smart. And it's just not real. It's fake. It's fake. And when I watched GME squeeze the first time, it like went through a process. It's nothing. Disregard it. Okay, let's try to explain it away now. Okay, let me throw some smart shit out there. Okay, let me get angry on FinTwit. And then, okay, I'll join in now once it's at $500. And then as soon as the last squeeze happened and the original OGs knew it was never coming back again, the moment they pulled the plug, you saw these same people try to dismiss it as quickly as possible. And the truth is, in the background, all these smart people were screaming at their own people saying, figure out how they did this, and then they started to trade the market like that. They don't tell you that publicly, but that's what happened. Some of you may have been there before. I don't mean before Wall Street Bets got a 1.5 million followers. I'm talking about when it was like sub 150,000, 15,000, shit like that. Find some suspected saboteur on Twitter and ask him about those days because it was fucking wild. Same shit going on. Same shit's going on right now by these same people trying to explain shit that they don't understand. So, anyways, rant's over. So, as a bear, what you want to be seeing here is you got a nice three trigger crossover here above, right? And what you want to be what you're waiting for here is to see the reaction off of this hourly, 5 minute, and 1 minute. So in the background, I'm going to watch this and see if there's another place to try to get us down into Friday. 1 second here. We're going to look at the options chain right now for today and tomorrow. Dude, I wanted to freak out on Twitter last night, and I was like, I'm going to sound like a raving lunatic. I'm like, I'm not gonna post anything on FinTwit tonight. I'm just gonna be quiet. I'm gonna sit down. And then I wrote I think I wrote 3 posts last night. And I'm like, nope, not posting that. Nope, not posting that. Nope, not posting that. Yeah, look, we got call buyers stepping in for tomorrow. 38,000 calls at 410C. Unreal. We've got a bunch of calls right now. 90,000 calls at 410C on today's expiry. Just buying it up. Remember what we told yesterday? If the call buyers don't show back up tomorrow, if the call buyers don't show back up tomorrow, it could be Armageddon, man. Market just crash. Crazy. Like these people have been this is like these people have been telling you that the market crash is over. No. 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 But now they're warning you that if the 0-day call buyers don't show up, that it might crash the market. It's insano. These aren't the people that told you in October or December or even this week that the market crash is over. None of these people have told you that we're in a bull market. All of them are looking for the last leg. All of them were positioned for Vixpiration to go down. All of them have been positioned to hit 360 or even 3060. All of them believe that we're in a market crash still. And all of them will give you any reason that they fucking possibly can that they can try to get to stick to get 0-day call buyers to stop buying 0-day calls. It's bizarre. It's bizarre, and it has nothing to do with whether the market goes up or down. None. Well, there's a small. I know. I understand all of the mechanics of it with the 9 to 10% of the options market swinging when institutions are not buying and selling real money, buying real money, but selling. I know all about the hedging on the market that tries to dampen volatility. Got the whole entire thing. Have conversations with some of you on the phone about this stuff way prior to this. So, just bizarre. Straight bizarre. And they're here this morning buying. You would have thought that today, with the bad readings this morning and the bad news that we get, that they would have stopped buying calls this morning. They didn't. They bought them. They bought 0 dates. Market wasn't even priced in for us to go lower than 403, 405, somewhere in here this morning. So now we got to wait for the call buyers to go away and everybody to get fearful and start buying and stop. You can actually see S3 is right here. Look how close S3 is this morning. It's not even priced in for us to go lower. That's blowing my mind. I bet if you're a bear, you got to be pissed right now, right? No possible way you're not pissed. Okay, so S2, a bounce. We're looking for a rejection above. I'm going to draw some boxes for you to look for rejection here. So we can hopefully at least get another down day and possibly another 5 to 6 sessions of down, or at least squeezes higher in some kind of a down capitulation moment wherever that price is. We're not seeing price velocity on the market breadth, where we know that people are still long this market underneath the surface. I would like to see us at least get to 396 if possible. If we can break through 396 even briefly, it would be even better. If we can get down to like the 380s, I'd be stoked to cool this market off a little bit. But I don't see it. I don't see us getting below 396 yet. I guess if we do, we'll look for it. But I would really like to see at least some sideways and down, sideways trade, just cool off the market a little bit. So I'm going to give you 2 or 3 places to look at this morning. First one is going to be 410.16. Right here. Do you guys follow me on right there? I don't know if any of you follow me on @CaptainsAlpha on FinTwit. Last night at 8 o'clock, I was on the phone with Chaz late night last night, and I'm like, man, I'm looking for any reason that these people are right. And he's like, what are you doing? I'm like, it was like midnight last night. I'm like, I'm just trying to look for anything these people are saying that I'm missing. $411.72. So I spent late last night looking for anything, and normally, under normal circumstances, you can see if if we're gonna have a true market crash, normally, unless it's an unknown event, right? This is something that's not priced into the market. I'm not going to name those events, but an example. Well, I guess I will. Like an example would be 9/11. Was unexpected to our stock market. So if you have an event like that, right, you can actually look back in time and see those events when they unfold. That the banks were not able to get out before that those market crashes happened. But there are most of the crashes, though, you can actually see. You can actually see the banks divest themselves of this market before price follows. So you can actually see them selling, and in price either diverge or maintain. And I am not seeing it in the background. I'm not seeing that same structure. I'm not seeing the structure leading up into December and January of 2022, December of 2021 into January of 2022. Not seeing the same structure at all in the market right now. It could unfold over time, but I haven't seen it right now. And you can look back historically, and you can actually define. You can actually define. You gotta not define, but you can look back and say, oh, you can see how breadth was leaving the market, and price stayed high as a crash was about to happen. You can actually see when these banks buy the market going all the way up, and then you can see them selling the market right before we crash. And you can see it historically, right back to the start of the beginning of the stock market. And I'm not seeing it right now. So I guess they can't tell you if we're going to get a 0-day crash, but we know for a fact that these 0-day buyers are not retailers. So my assumption, I'm assuming at this point that if we do get a 0-day crash, that you would still see it behind the scenes. You would see these same banks saying, okay, we're going to stop buying. Well, this is the deposit from Market Watch and FinTwit at large, that it could be a crash that no one sees, right? These are the things that market crashes are made of. So I'm like, okay, well, if that's the case, more than likely these people know what they're doing, and they're going to foresee or foreshadow this market crash, and so they're probably going to divest themselves at some point. So I haven't seen them divesting themselves at the scale that they should be. And now, let's say they don't, and we get the crash. We'll know then. Yeah, okay, it was 0 to 8s, and we fucked up. But for right now, these guys are doing both. They're buying and they're trading the 0 to 8 market. And we'll explain the different reasons that is happening, and why it's happening, and the rise of it. The rise of it was actually the prediction of it was actually in 2018, not 2020, not 2021, not 2022. In the rise of 0 to 8 buyers, they don't just buy calls; they buy puts too. So we'll talk about all that. I'll show you the facts on that at some point this morning in the discussion on that took place many years ago. So we'll get into that this morning. We're gonna go way back in the time machine when this is actually thought about and discussed by professionals. Okay, so we're looking for rejection here right off the 5-minute, almost to the pin right here. We are getting some kind of a cluster forming to go higher. We'll see if they take it up higher here. This is really the one right here that bears want to sell. They want to sell this red one right up here. If you guys follow me on @CaptainsAlpha, got a reading last night, about 8 o'clock at night. While I was researching last night, got a reading, and this morning I woke up in a fervor, and I posted on @CaptainsAlpha that to expect 5 to 6 sessions down. That would be my expectation at this point. That you'd see 5 to 5. So maybe this end of this week and then next week could be sideways and down. Though I don't see price velocity being a factor at this point. Hold on a second here. If you don't follow me on @CaptainsAlpha, you can request to follow, and I let everyone in as long. I use it to make sure I keep the bots out of there because they're all over Twitter, and I don't want the bots on my alpha channel. I shit post on FinTwit, but I try to keep this handle for just straight posting with data that supports where the market is headed. You can actually go through the profile and go through and see everything that I post there. I also post levels every day there as well. If you don't get those, if you see me putting them up every morning here, it's the same data that I'm posting there as well every morning. I know that you guys pay for that shit from other services. You guys pay people $30, $50 a month, $15, $10 a month to get your levels every day. They're free. @CaptainsAlpha. Here we go. Oh, look at that. We got more people this morning. I'll get all you guys in there right now. I'm going to go right through my profile and read a bunch of posts. I got some cool posts in there. I posted a post recently about XLY, XLC, a bunch of others way back on. Let me look at that one. That one's pretty cool. Sometimes there's some misses, but not many. You're talking like of 10 posts, maybe 1 or 2 of them are wrong. But other than that, they're fucking spot on. So there you guys are in there. All right, hold on a second here. And the other post that I put in there was S-Dow calls. So let's look at S-Dow real quick. A couple things to look at here, because I did post about S-Dow, and we'll talk about that one this morning. Let's see here. Let's look at S-Dow. It's one of my favorite market hedges. We'll put it there. Let's see here. Just a second. Excuse me. Got a very sore throat this morning. Yeah, I like this. Okay, so let's look at S-Dow. It's a 1-minute chart on S-Dow right now. And S-Dow's trying to work itself up, right? Trying to hold. It's got a nice, beautiful cluster back here on Friday the 10th. Got a great cluster back here, 3-trigger cluster right here, and it's coming on support on a 4-trigger cluster. It might take some time for the market to roll here, but what you want to see on S-Dow is this support come up, and cross over this support. You want to see some kind of consolidation in here, and I'm just going to change this here. You want to see some kind of a consolidation here, and hopefully we can get some rips higher at some point. We'll look at it on a larger time frame as well. Trying to fight its way up here. Now with this trade, so this is great consolidation back here for S-Dow. And what I'd really like to see here is you see how it comes up and then it gets slapped right back down, right? Comes up, slapped right back down, comes up, slapped right back down. So you really don't want to be taking an S-Dow call right here, do you? They don't really work. What you really want to see, though, is S-Dow be able to hold 25.42 and find some kind of consolidation, and you should be able to get at least 28 off of it, at least in the short term. 28 would be nice. Yeah, I'd say 28 flat. Maybe a 27 or a 26 call. We'll take a look at those this morning and see if we can get those, and see if there's a way to hedge the market. One of my favorite parts about this hedge, it's triple levered. So if you put some time on them, 1, 3 months, sometimes even 6 months, they don't really react to intraday moves in the market. If the market goes up 1% down, 2%, 1% up, 1% down, it tends to not destroy those options for myself. And I also am usually looking for interest on specific strikes when I buy that hedge. So if I see that there's a high concentration on one strike, a month, 3 months, 6 months out, I'm trying not to stay on strikes that no one else is in because it's not a highly traded hedge. I want to be with the other people and get off the bus before they do. Like get on the bus with them and then get off the bus before them, right? Some of the last bag holder. It's something you have to watch if we do make a large market move. So if, let's say we get a spike, or let's say we get a spike on S-Dow. I'm trying to get out like right here. Take my money and run. And as the bus is unloading up here, I'm not getting stuck as a bag holder until the next squeeze higher. Make sense? The bus is up here. There's still people on it, and I'm trying to get off the bus one stop before everybody else. So we'll take a look at S-Dow and see how high it can go. It's a great market hedge. That's actually a great hedge for. It's actually a great hedge um, for in case we get the 0 to 8 Volmageddon. And that's the other funny part about it. Here's the other funny part about the Volmageddon. So yesterday we were talking about, I was talking to you about how the market's not pricing in move to 422, and I think I moved to 402, something like that. I have it written down here. I said we'd paper trade it. It was 404P, I think, and 422C. And I said, the market's not pricing this shit in. They're like worthless. I was like, that's not right. Something's wrong here unless Theta Gang's going to win. But the most ironic part about a Volmageddon event, because we've got one coming up already, right? We've got the debt ceiling Volmageddon event, right? I guess we call it that, right? Last time we had a debt ceiling crisis, we went into June and the market went like this. It was like straight into June, and then it went straight down to the depths of hell. So I'm like, okay, so how do I hedge that, right? Okay, I'll buy a penny put, a literal penny put. And how do you hedge 0 to 8 Armageddon? Oh, well, every call I buy, I guess, on the SPY, I'll just buy a penny fucking put, right? That should do it, right? So if I buy like a 30-cent call on the SPY, you're telling me that I can buy a weekly penny put or a bunch of weekly penny puts for, I'll spend $100 on penny puts and you're telling me they're going to print 10 grand, right? That's what you're telling me. If we have risk of that, right? So just buy a penny put every week to hedge the 0 to 8 massacre that's on the way. Okay, so it's a penny, right? When I buy puts or calls, shit, I lose 10 cents all the fucking time. So what's a penny for a week? I don't know. I don't know what these people are trying to say. I don't know the logic behind. I don't understand the logic behind this lunacy that's being screamed. So I guess that's what I'll do, right? I was looking at 402s yesterday, right? 404s. I was looking at 404s yesterday. They cost pennies. So I was like, oh shit, let's start strangling the market. We'll start strangling the market. We'll fucking add some cheap ass puts on every time we buy a call. On a high, I'll add some puts on. If I'm gonna take this long, we'll just add some puts because they're dirt fucking cheap. How are you guys doing out there? Yeah, it looks so. Yesterday's market looked like when we were looking at yesterday's market, it was looking like I asked the question on FinTwit. I said, "Is Theta Gang going to win this?" On FinTwit yesterday, I asked, "Is Theta Gang going to win?" I wasn't joking. I was being very, very serious in that post, and people thought I was kidding. And I'm like, "No." I'm looking at the options chain right now, and like all the high calls are worthless. All the even the puts at 404 were worthless. And it just made sense. Like it's a 50. I think it was a 56 cent. It was a 58 cent trade yesterday. So I'm like, 58 cent trade to pick these calls and puts up days out, right? Three strikes out or three OPEXs out. I can buy penny fucking puts and penny fucking calls. So I thought that was bizarre. And so what it's implying is that we're not making a huge move down, right? We're not making a huge move up either. We're gonna trade a range, and they're gonna torch. And someone just posted, Omar just posted. There's 130,000 zero dates expiring today at 410. It's just 10:22 in the morning. Yeah, you see it, right, Omar? You see it, right? They did this shit when we were going down too. So when we were going down in 2022, we'd be sitting here, and they would hold the market up with calls, zero date calls, right? You can actually watch the option chain. Although you know who I'm going to give some credit to was I think it's VolWiz or I think VolWiz or Spotgamma made a very clear point that people don't realize, and that is the intraday implied vol is not calculated into the IO of options. So you won't see like people will be like, "Well, I didn't see these, I didn't see those," and I'm like, "No, they don't calculate that shit." When they come in the market with zero dates, you won't see them register anywhere. So you won't see like you see me here in stream and I'll say, "Hey, look, they just bought 300,000 fucking calls," or "Hey, look, they just bought 300,000 fucking puts." That shit doesn't register anywhere. It doesn't get calculated into anything else, and it's like a thumb. There's like an algorithm at a bank that puts a thumb on the market and says, "I want it to hold, I want it to go down, I want it to go up." And they literally massage and manage the market. So you'll also see the spreads come in. You'll see both sides come in. You'll see puts and calls come in. You'll see two sides on just calls, two strikes away. It's usually like like right now you'll see like 411 calls and 413 calls come in. Same time they'll hold both, and then they'll let one side off and ride the rest up. You'll see them come in and hold calls and puts, and then depending upon the direct, like if we have real money buying and real money selling, they'll pull one side off and ride the other way up, the white way up. And that shit's been going on for years. Now the size has increased over the past 3 to 5 years, but it's been going on for many, many, many years. Before there were, it seems like it doesn't seem like it's scaling. It doesn't seem like it's scaling with like bizarrely. It just seems like the options market has grown, and so they've had to increase their size to maintain control of where they want the market to go. Now, I know some of this is hedging for structured call spreads that they're in, put spreads they're in, either selling or buying. But there's another part to this, and this other part is more than likely an algorithm from a bank that's trying to deaden volatility in the market. And they've always done it. It's not like it's never been done. It's been done for years. I'm talking years, like 6, 7, 8, 9 years that I think I've been trading not options, but zero dates, at least 6, 7 years. And it's always been there. And the options market has grown over those years. So for them to need to increase their side, and then you've seen me on this program at times say, I don't know if it's dealers that are doing it. Could be dealers just not telling you. Could be weaponized gamma. No one wants to admit to that. I believe in the weaponized gamma aspect to it, that there's a thumb on the market being lifted and put on the market. You can actually see it happen with price, with the actual price in the options market. You guys know about them being like long, let's say, tech stock. And this is another fascinating thing Vol brought up was that Fridays. This is really cool. I gotta give him fucking credit. This guy is smart as fuck. I don't know if I should say this or not, but I'm fascinated to see what happens on Friday because tech doesn't have 0 date expiration every day of the week. But guess when they do have 0 dates? On fucking Friday. And we keep seeing Fridays rip higher, right? So if we're seeing Fridays rip higher, why is that? Especially tech rips higher on Friday, which ends up carrying the SPY up. And his point was, you don't like you've got tech traders, tech speculators that might, let's say, buy I don't know a Tesla or an Apple or something. Right? They've been riding the spec growth now since October, right? December, riding spec growth. Some of it, like Tesla's been ridden since when? December. And so, if they're trying to pump those prices up, they're using weaponized gamma. They come inside of the options on Friday, and they manipulate the market to get their underlying to move higher. But these aren't retailers, man. These aren't hedge funds. They can be hedge funds, larger hedge funds, smaller banks with risk on through a hedge fund, or maybe a large bank with risk on through a hedge fund. We should get squeeze up here. This red bar is where what we're watching here. So let me show you this here. So I'm watching it in the background. There's not much going on right now other than the squeeze higher. And so what you're seeing here is you want to see this green, this 5 minute, this 1 minute come up to this resistance area. There should be a trade higher to. Sorry, wrong one. My bad. It's gonna look similar, I should say. Hang tighter. So I want you to watch this closely here. Price is above the 1 and the 5 minutes, bullish. Just so you know, this is bullish. You want to see the crossover of the. I'm saying I'm watching this in the background, and I was watching fucking S-Dow. So you're gonna watch this white one here, this red one crossover. Price is above right now, so it's very bullish, and we're looking for a rejection above here at 412ish, right around there. So we'll see if we get that rejection or not. We'll know here. We're gonna know here if we get a rejection or if we're going to have a continuation higher. So what you're looking for here is you're looking for either rejection here or a trade higher. So let me see if I can figure this out for you. There we go. You want to see if we get a rejection right here on the 5 and the 1. Should be right around here coming up. Now, if the price goes above the hourly and the 5 and 1 minute, we can take a trade for this higher actually to squeeze nice and fat and high and do a return to the scene of the crime at 413.51. So we'll let this play out right here. And if it does get bearish at any point for a trade lower, we will take it. You guys want to just leave this up for you and put the book map up so you can see it in real time? I'll put it up right now for you so you can see it. You can watch how it plays out. Here, I'll leave a couple boxes here for you. So this would be a long trade right here. Above, if we can get above. And then we've got a short trade right here. And we'll see if we can get this bearish crossover and come back down. If you're looking for the bearish crossover, you're going to be looking for this to happen right here. And this to happen right here. I was talking with someone after the program yesterday about getting in a position, and he was saying they got cut up. And hold on a second here. And how do you not get cut up? And I was trying to explain a way not to get cut up, but there's an even easier way, and that would be where you wait for confirmation. So you're gonna, if you want to take a short here, you could just wait till you blast through here, and then you would take the trade right here. somewhere in here, and not mess with any of this stuff here. So watch this as it plays out. You want to watch this white line cross above the red. That would show continuation to the upside. 411.75 right now is looking like a target. 411.75. Somewhere in there. It's 411.50. How's everybody doing? Yeah, Bookmap's up right now. Am I missing something on Bookmap here? Hold on here. See those sellers waiting above? That orange line that you see is right here. Right here. There'll be a retest at 410.26. We'll look at that one real quick. So 410.26, you'll see a retest here. So you'll end up seeing this come back down. And we're either going to take the trade higher. And if we break below this retest here, this would be where you'd enter your short right here for the next leg lower. But otherwise, it is long, baby. Long into 4. Let me see if I get this right here. 411.78. How about this? I'll just give you a target up here. Get rid of this box. Give you a target. Right there. Right there. Wherever that yellow line is right there. Here's S1. Here's the pivot. Intraday negative positive gamma. And we'll make this the H line. Put that right there for you so you can see it. This is the target above that's on the other screener that I have. The 1 minute is now crossing the 5 minute. It's looking bullish at this point. Some questions here, right? What goes into my decision to buy OTM versus close to the monies? Well, first of all, yesterday somebody posted on FinTwit. They said, "Why is he always so bullish?" And it's not a question of me being bullish. It's a question of the function of the tools available. So I trade the SPY, and because I trade the SPY, puts are not built to print unless it's very directional. So, and you have to be fast. Like, you have to time when you buy the put. You need velocity and price on the downside to make them print, and then you need to close them for profit. They're very needy, I guess, would be the way that I would describe it. You have to pay attention to when your entry is. You have to hold them only for the move. You oftentimes get caught where they don't print, even if it goes in the direction you want them to. They're just not built. They were never intended to pay. Now, puts on SPX do great. So those downside moves, trade SPX, I think it's great. If you're going to short futures, Globex, great. You get paid very well with those products. But on the SPY, the product itself, on the downside, it doesn't pay well. So I'm not technically bullish. I'm just using the tools that pay best. And so I tend to wait for a dip to buy with calls that are structured to print heavily and hold their value if there's pullbacks. They tend to. They tend to print better. And there's more interest on the call side. And know that you guys are, if you're a bear, right, you have to know that you're not the largest group of or interested parties in this market. I know it could seem like that, but most people are bulls. And so you have more people trading the call side, even when we're in a down market. You have more call buyers usually, more bullish traders and investors. If you look back, I mean, I don't have to explain this, right? You guys just look at the stock market; it just goes up. You guys know over decades and decades, if you look, our market is built to go up. It's not built to be some fourth world country where it doesn't go up. So over time, I've done better on the call side than I have on the bear side. I've taken the bear side as a trader, and I've been less successful on average than I have as a bullish trader on SPY. So for me, that works for me. It might not work for you. Some of you guys out there call tops like crazy. I give you all the respect in the world. Some of you guys are like, I nailed it to the fucking pin when we're going to roll it over, and I nailed the bottom to the pin. I'm like, awesome, great for you. That's amazing. And I've got nothing bad to say about that. But for me, I've made the most money as a call buyer buying dips, regardless of market, regardless if we're going down, regardless of going up. And I like that too, oftentimes because it's more clearly defined. When we're in a, you guys all, I've run, I run this oversold and overbought spreads, and I used to do the put spreads on the top, and the top was always stayed irrational longer, and price was harder to nail down than on bottoms because bottoms tend to be on any time frame. Bottoms tend to be a capitulation move, like statistically tend to be a capitulation move. Not always, but statistically. And tops statistically tend not to just immediately roll over and nosedive. They do when we squeeze higher, but they tend to remain irrational longer in price. So it's just easier. I'll take. I'm not here to win a popularity contest on social media and be like, I'm not here to win that contest where I'm like, yeah, I'm shot calling tops for internet cred. I'm here to make money with the easiest way to make money. That's what I'm here for. And when I log off at the end of the day, when you log off at the end of the day, ultimately you're here to make money. You're not here to win popularity contests with anybody. And I find that to be the easiest thing to do is to find that bottom wherever it is. Even during the COVID crash, buying those bottoms, people don't want to tell you that either, do they? They don't like telling you that. So if you have a real crash, you usually make a lot more money on buying bottoms as you head down than you do on the actual crash. So you do if you're at the top. If you call a crash and you write it down, it's fucking it prints. But you can't close that shit out either. Ask people that. You can't really close that shit out. You fucking diamond hand those fucking puts, and you can't get out of them. And they increase in such value that you can't even get back in the market. Typically, in those not that the controlled crashes that we had in 2022, but if you have a real crash, you definitely have to diamond hand because those contracts go like stupid. $1,000, 5,000, 10,000, 20,000, 30,000, 50,000. And you're just like diamond handing the whole way down. And some people get caught where they we hit bottom and they don't actually get out of those put contracts. They go to zero. They lose all their money. Squeezing higher now to the H line. And we're going to see if the bears can get some rejection here. Bears are looking for rejection right here. So if you're in calls here, this is the danger zone. We're coming into it. It doesn't always hit to the exact price point. It gets close. So there's like you shouldn't be like the bull to or like shouldn't be like a firefly or a mosquito to the electric post or the bug zapper and trying to get whacked up here. You just want to see how this plays out right now. Let the market open up. Find out where the market's going. If we get a retest down below, it'll be on this white line right here, though it is looking bullish. Bulls are looking for. Why did I delete that H line? Bulls are looking for a retest and then an attack for the H line above. I should have deleted that, but put it back on there. All right, let's see what you guys are saying in the chat real quick. and we'll see what you guys are doing here. If you are bearish still, you're looking for a break below either of these two lines. We'll get rid of this one now. You're gonna be looking for a breakdown here, though I wouldn't be taking a short here unless you get some confirmation. You're looking for a break down below, and then enter the trade here. Or you're going to be looking for rejection above, and then the same break here. And then down here is the big trade, the trade lower. This is why you take your puts off on the opening bell, right? We talk about that. If you're long or short, always take my money at the bell and get out. Reset yourself for the next trade. Oh, sorry, Gene. I wasn't able to answer your question. How do I decide on what I buy? Okay, so I used to be able to buy. I heard this comment too. I read this. They said I read a comment in a YouTube video. I read a comment that said I don't know why people don't buy weeklies anymore, and I'll explain to you why right now. Back in the day, I'll make it real quick. Back in the day, if we were going down, if we were going up, you used to be able to. Give me 1 second here. I gotta knock on the door. I got some coffee cake this morning. I'm so stoked. I'm being loved on today. So back in the day, you used to be able to buy a directional call, week out, month out, whatever, and the market would tend to go in that direction, nice and easy. It does not do that any longer. You have computer programs, algorithms that have ruined this market. All that market is gone now. Now you will directionally go where you want to go. And as you know, we do these violent moves intraday. We're up 70 points, we're down 70 points. We get a blast down, blast higher, come back into range. And this has destroyed the options market. Now, let's say this is like a month out or even a week out. And so what has that led me to? That's led me to know two things. I can only stay in a move anymore for a direction. Number one, like if I say, okay, we're at a bottom, we're at a 408, we're at a bottom, right? I know we're at a bottom here, right? And I know that we're going right here, right? It used to be back in the day, you could buy a call down here for like a weekly, and you'd like come back in like a week, 3 days later, monthly, come back in a week or two, and you'd print. Didn't matter if it rolled over. You come back up. As long as you're directionally right and you bought the bottom of that direction, you were at the top, you'd be fine. You wouldn't have to worry about it. Just be like, I'm out of here. Good. Made my 30%, made my 70%. No worries. Right now, can't do that shit. It's like all directional. Here's where we're at. Here's my target. The moment I hit it, I'm out. And so how do I maximize that? I already know if I buy a weekly and we at any point break this, that my weekly is fucked. It's never coming back. It's never fucking coming back. I already know if I buy a monthly, it might come back. It might make like 5% or be flat. So dealers have gotten better too, right? Of not paying you, right? So for me at least, I've been reduced past. I got pushed into having to trade the indexes probably 2 years ago. I got pushed into it, so now I've been forced into trading the indexes, and so I'm on 0 dates, 1 dates, sometimes 2 dates, 1 dates, 2 dates. Then how do I pick? If I'm trading intraday, so here's an example. So if I'm trading intraday, and like right now I'm trading this right here, right? I'll start immediately watching the options chain for 0 dates in the money. And I'll watch up to a 30 delta call, let's say. If I think we're going up here, I'll be looking for that 30 delta call, and I'll see if there's, first off, is there interest in it? on that strike. If the interest is higher, let's say it's a strike closer to in the money, there's more people on that one. I'll be like, yeah, I'll get on that one, and I'll watch. Like if I'm in the wrong strike and they move from one strike to another, I'll jump off and into that strike that they're in. And these are usually computers and banks. So if they have high interest, and I usually follow that. We're gonna above tag the H line at 411.79. And we should see some resistance here. You should see some selling right as we break into it, or come into it at least. I'm going to show it to you right now. And we're coming into that resistance right now. Now, what you should expect to happen is what you're looking for to happen is a rejection here in price. And you're going to wait for the 1 and 5 minute to come up. This can turn into a 3 trigger cluster. If that green line comes down, that's price. Hold on. This could turn into a 3 trigger cluster to go higher. Now, me personally, I don't think we're going higher. I think we're going to either roll this over and trade it sideways or roll over at some point. My guess here is that we're going to reject here, start to trade sideways, and then hopefully we roll this over here and price comes below. Now, I'm not in a trade right now, but just for looking at this cluster right here, I'm probably going to take a trade. And so we'll pay attention to this and see if it produces an up move. This is where you'd be buying calls, and this is where you'd be entering puts down below. You don't have to get cut up in here, torn up. You don't need to be like picking direction here. There's no reason to. I was trying to show how to buy calls and puts and not get fucked up in here, but someone yesterday made a very good point. They were like, "Well, I'm kind of buying the puts and the calls at the wrong price." And so this is what I'm talking about in this where I'm leading to in this conversation. So even right now, where we are, right? So this is where we are right now. So now I'm looking at the February 16th calls and puts on SPY, and we talked about this earlier, right? 410Cs are now trading at $1.96. They're in the money. They just went up 100%. There's a huge concentration of calls there. I think Omar pointed it out earlier as well. And so right where we are right now, right? If we're going to go higher, right? If we're going to go higher, my first thing that I'm going to ask myself is, what is the price target higher? What is higher, right? And I'm going to look for a couple things here. So I know where the scene of the crime is, right? The scene of crime is up here at 413, right? I know, I'm going to show you guys this on something else. So let's say I think we're going up here. The couple things I'm going to be looking for are, let me mute this the background. Well, we're going to talk about strikes. We're going to answer your question in depth. So usually these last squeezes right here, and at the end of the day, these are all bullshit. This is all MOC buy side imbalances usually. Squeeze is higher. This isn't real money here, and so I'm like, top is probably the pivot line right here. 412. My next target higher is going to be 412.54. That's what I'm looking for. Right there, 412.54. And the Bears really do want to turn this support into selling, right? They want to hold this line up here if they can. They sold last night in the middle of the night at 8 o'clock. So somewhere in here, they probably want to hold this at minimum. Probably going to see a more supportive market above this line here. So I'm not bullish here, but if I was, I'm going to look at what? Probably 412Cs. Not 413s, but like 412. Somewhere right here, so they print the end here, right? And 412Cs are only one strike out of them right now. They're 80 cents, right? So they're 80 cents currently. Do I know right now that we're going to win right here? No. We just made a run up here, right? So the 412Cs are probably very expensive, and there's probably some horse trading going on in the background. And they probably want to reprice these options before we get to 412.54 if we're going there. They don't want to be paying 412.54s, a dollar. Well, right now it says that they pay 40 cents, so they don't want to pay $1.20 up here. So likely, not guaranteed, but likely, they're going to cool those off a little bit. So I'm just going to pay attention to them. I'm just going to start looking at 412Cs. I'm going to watch the natural rise and fall in the price of 412Cs. If they go down, if they fluctuate down to 60 cents, down to $1, down to 50 cents, down to 90 cents, down to 40 cents, down to 80 cents, and they come up slightly, and I'm going to try to find the bottom of that option if we're going to make that move higher, right? So I'm just watching that option right now. Matter of fact, they're trading now for 79, 80 cents, 81, 82 cents, somewhere in there. And so I'm looking at them right now, and you know what I'm saying to myself? Yeah, I'd like to get those cheaper. I'd like to get those like 60 cents, maybe even 40 cents. So I'm going to watch those options right now. And if we don't have a wild swing of price movements, but I think we're going there, I'll be like, yeah, if I can get those, might not get them at 60 or 40, but I might get them at 60. I might be able to buy them at 60. And if we have one more quick move down, I can buy some more at 40. And now I'm in at 50 cents and we're moving higher, right? So I'm like, okay, how cheap can I get those calls for? Right? I love buying cheap shit. Love buying cheap puts. Love buying cheap calls, all that kind of stuff. So I'm going to keep my eyes on them right now. There's 78 cents, 77 cents, 76 cents. They're going down in price. So I'm just going to keep my eyeballs on them. And I'm going to let this work itself out here. I just want to see if this support level holds. And I'm going to look for a higher target, a pair of 413. Now, while I'm doing that, I do actually have a bearish look on the market right here, right? I have a bearish view in the market. And I know that the options market today is not priced in, but the lower target for today, the implied move currently, we're going to look it up. Omar was like, hey, man, there's a ton of calls. They're not going to want those to expire in the money, right? We know that 410's likely. They're not going to want these 410Cs to expire in the money, right? Dealers aren't going to want that to happen. So let's take a look. Let's find out if these guys are still on 410C. Maybe they got some spreads that they want to print into the bell today. So I'm going to look at the weekly implied move, and I'm going to look at today's strike, 409.13. So we're kind of right there, huh? The lower move right now is 409.13. Shocker. 409.13. So I think we're going up, actually. So let me look at those. Now there's 73 cents. 412Cs, 73 cents. I think they were 89 cents at one point. We'll look at a 10-pack of these. Implied move for the rest of today, 409.06 as the calls come into the options market. Implied move tomorrow is 407.56. So let's look at today and tomorrow. 407.66. So right down at S2 for tomorrow. That's the low for tomorrow is down here. Right now, 409. 409 for today is the low. 409.01 right here. 409.01 right there. Isn't that wild? High target 412.98. I'll make this blue so you can see it. There's blue. And then this is the lower implied move from here for the rest of today. And the higher implied move is 410.98. Get that right? 410. No, did I get that right? 412.98, I think. Right there. You get that right or wrong? 412.98. Can I make that bigger, maybe? This one right here. This is what the options market has priced in right now. So kind of right in the middle of it, aren't we? Go any way. Hey, Sid. How you doing, brother? What are you guys doing? You right on, Sid. I'm not paying attention to the chat right now. RD Blot says super chat at $5. Just wanted to say love your stream. Thanks for doing this. I've been learning a lot. Right on, RD Blots. Jeffrey subscribed, and Rajneesh subscribed. Brad Armitage, brother, how are you doing? Trading shorts. Let's have a great day. Happy trading to all, and shout out to Sigma's keeping it a buck. Right on, trading shorts. Right on, guys. I appreciate everything you guys are saying. So right here, we don't have we don't have a lot of range expected today, do we? Or currently we don't. Currently we've got range expectation of here and here. Not a whole hell of a lot of expectations. All right, we'll get rid of this. And my next target's going to be above 412. Maybe a failure of 412. And not surprisingly, probably the pivot line. So maybe I can take this trade right now. And see if we can get up here and trade this. See if we can trade this pivot right up here. This rejection line is still up here. Probably going to cut these loose really quick here in just a second. If I can get 90 cents on them, I will. I'm going to try to sell them at 90, 91. Just got 92 cents on these. Okay, so I just was in and out of some calls right there, just scalping really quick. I'm going to show you what's going on in the background here. And we're coming into this resistance right here. Anyway, to see it as it unfolds. And I want to see if we get a little bit of a pullback here and anything like this happening. And watching price, see what its reaction is. Does it start to break through and roll over? Take a put right here. If it starts to break above, consolidate and move higher. You don't need to take this trade here until we get up here or down here. Okay? We'll just watch this as it unfolds. I'll just delete this so you can get a better idea of what's happening. Breaking through the hourly right now. Bears do not want to give this hourly up. The hourly has been trend for quite some time. If you want to see what the hourly looks like, let me get rid of this for you. Let me show you what hourly has looked like here. It's where all the buy the dipping has happened. All of it. And I'm going to show you something else neat in the background here. And we'll get back to the options chain here in just a minute. I have to do some stuff for you so you can see it. So you can see this is where all the buy the dipping has happened, right? This isn't indicative of 0-day call options. You know what this is indicative of? More than just a bull run. You know what the VIX 0-day catastrophe is looking like to me? It's not looking like a VIX crash or a market bullmageddon. You know what it's reminding me of? Watch this trend right here. Watch this trend get bought back up again. Watch all this huge momentum coming up from underneath right now, right? Telling you no. You know what it's looking like to me? It's looking like a repricing of the VIX. That's what it's looking like. It's not played out yet, but it looks like it. Doesn't actually look like VIX is going to crash up. It looks like everybody bought the VIX with big money, with size. I don't know if I can show you this here, but I was looking yesterday. I'm like, these fucking guys. These fucking guys are buying the VIX this week. Let me see if I can do this in the background. These fucking guys have been buying the VIX, right? They went in. This big money went in. Showing on. Give me a second here. Give me just 1 second here. It's not showing up on my screener here. I don't know why. Let's see if I can show these guys buying the fucking VIX. It's wild watching them. Give me a second here. Yeah, I guess this can kind of show it. Let's see if I can do this on hear what they were doing. I'll show you what they were doing. I'll show you why they're on fucking on Market Watch. Why they're screaming. I'll explain to you exactly what they're doing. I'll show you exactly what's happening. So they bought the VIX here. They bought the VIX here too. So they bought the VIX right here. And they got told, get bent. And they bought the VIX here too. They got paid here, which is pretty good, back in August. But right here is where they bought the VIX. So they've been long the VIX since December. And they're in a rage right now. Pure rage. They came back in and bought the VIX again right here. And they're in a rage again because they just got told no again. Now, all this down momentum right now, right, is it's like no. Now, if you're a VIX bull, you're like, nah, we're going to squeeze through this. I can't say that's not true. That we're not going to squeeze through this. But I will tell you this. If we keep seeing call buying, right? if we keep seeing call buying, you're going to see a repricing of the VIX. And, we can actually see it. You want to see a repricing of the VIX? You want to see when it happens? You see this right here? You see VIX down here at $8.67. See the VIX down here at $10.34. See the VIX down here at $8.67. Can you imagine the VIX going from $19 down to $9? You know who that would enrage? Enrage some people. Enrage. If there was a repricing of the VIX down to $11.43. If there was a repricing of the VIX down to $14.23, enrage. Big money. So who's the real risk to? The risk of a market crash? Or you're talking about how about a risk to the VIX market? How about a collapse of the VIX? Has anybody talked about that? No one brings that up, right? What if the VIX goes down? What if the VIX goes to $8? Who gets fucked there? Not the bulls. Bulls don't get fucked there. You want to see something else that's crazy? See what happens when all these averages are above here? We get lows, man. You want to see the last time that happened, where price got underneath the blue line here? You want to see it? It's right here. 2016. You want to see what happened here? New lows, bro. $9. You want to see that nastiness right there? 2016 springtime. See it right there? We're not even down there.